So I'm a Namibian citizen. I'm of German descent. I'd love to speak German in this conference. Ich kann Deutsch sprechen, nur als Beweis, but I'll keep it to English. I know it's an international conference. I'm of German descent. I think I said that I grew up in Namibia, and I started this company about 5 years ago. It was literally an idea, and it's grown into a $130 million market cap company by now. Obviously, I'm very proud of that. But we have big plans. I think we've got a long way to go, and there's lots of growth left in the story. Osino is a gold exploration and development company. I realize that this is a generalist audience, so I'll try to keep the technical side of things maybe as general as I can, but I'll have to delve into things a little bit. So being a gold exploration and development company, our vision really is to make gold deposits and to advance and develop them and add shareholder value that way, with the aim of eventually, ideally selling the company for a nice premium, or alternatively actually developing the gold mine. And I can say this with a lot of confidence because being a mining engineer, having worked all over Africa in the gold space, I know the space very well. And as Mario said in the introduction, I've done this a couple of times before. I've sold 2 companies for around about $200 million. One of them was in Namibia, which B2Gold acquired and turned into a highly profitable gold mine. Makes $150 million free cash a year. It's literally $1 billion company. What we have here, Osino, what you're looking at this screen, is an opportunity. It's more than an opportunity. We have a project that looks and feels very similar to the last one that I sold about 10 years ago. So that's what I'll be telling you about in this presentation. And I guess right up front, the opportunity for you as an investor lies in the fact that this is not priced in yet. We are still largely seen as an exploration company, and the market out there hasn't really reflected the fact that we are fast-tracking this project so quickly and that it will come to either production or M&A so much quicker than most people expect. So this is the lay of the land here. This is what it looks like. I'm sure a lot of you would have been to Namibia. It's flat. It's easily accessible. It's easy to navigate, easy to operate over there. Of course, being a Namibian citizen myself, I know my way around there. You can see the drill project over there. That's what's being drilled out. We've got 10 drill rigs on the site, and we're moving this forward very rapidly. Just briefly, of course, I'll be making forward-looking statements. You can read this in your own time. It's all on the website. So in summary, we made an exciting discovery. So we're not just a concept. This discovery is called Twin Hills. It's a high-value project. We published what Canadians call it a PEA. It's a pre-feasibility study about a month or 2 ago, which describes this project. It's got an NPV of just under $400 million US. It's very simple and easy to deliver, technically speaking. So the processing technology, geology, everything is well understood and low risk. Because of its location in Namibia being in a infrastructure dense area, as opposed to many other mining projects in the rest of the world, it has quite a manageable capital and operating cost. And there's lots of upside left, which we are looking to deliver. And topping that all, as I said in the beginning, it's currently valued very lowly relative to our peers. And that's why I consider this an excellent investment proposition. So the founders of the company were Alan Friedman and I, the guys at the top there. As I said, we've done this a couple of times before. Alan is based in Toronto. He helps me with the capital market side of things, and operating like this is very helpful. We've got a respectable board of sort of industry veterans, locals, and Canadians that keep us honest. We do have a great team in Namibia. We've got about 120 people, 19 geologists, and the company is rapidly evolving. We're hiring engineers and others. So on the financial side, we have what is still considered a fairly tight capital structure. We've got currently 110 million shares out. We're about $120 million market cap. Our biggest investor is Ross Beatty. You can see his picture up there. He's a very credible, well-known Canadian mining investor. And then we've got a lot of well-known funds. Actually, the who's who of institutional mining investors are in our company for about 1/3 of the company. The rest is retail. Quite a bit in Germany, I should say. We have a lot of my family members and friends are from small to large investors in this company. We are very well covered by the markets. So we have about 7 research analysts that cover us that have a target price of about $2.60, currently trading at about $1.10, $1.15. And we've had a decent share price performance. As you know, gold companies have all suffered. We've all traded down, but we've traded quite defensively relative to some much bigger names out there and also relative to the indices. So I think that's a reflection of the tight shareholders that we have, but also the quality of the company and the assets. And I expect that when the gold market turns, we will probably be ahead of the curve, and I think quite likely we will outperform the market. We're in Namibia. I don't have to tell you too much about Namibia. It's a great place to be. It's also a very stable place. It's got a very stable mining regime. It's got a low level of political populism. So it's very predictable, and that's what gold developers and investors need. It does have an established gold mining industry, currently 2 mines, and ours will be the 3rd one there in the center of the country. Geologically, don't worry, I'm not going to go into too much detail. We are part of a well-known mineral belt that runs through the center of Namibia all the way into Zambia. It's largely covered by sand. You can see in the yellow areas here. And that's the reason not much more has been found here, because it makes exploration difficult. We found, or we developed certain techniques to be able to explore through this cover, which, through innovation, experience, drive, etc., these attributes, we were able to make this discovery literally under the noses of much bigger and better known companies like Anglo, Goldfields, etc. So it was quite a technical coup, and much more will be found here. As an aside, I should maybe just a little piece of trivia. This geological map actually dates back to German colonial days and is still in use today. So those guys did some really good work 100 years ago. All right, so when we started this company, we realized that it was important to create scale. If you want to raise money or you want to get onto people's radar screens, you need to have scale. By scale, I mean you need to have a significant or control a significant part of the mineral belt. So we originally, or right in the beginning, about 5 years ago, gathered a lot of licenses, all the blue dots you see on the map here. So we have about 7,000 square kilometers. These are just numbers. It's a very large license position to have for a junior exploration company like ours. But we realized that of course, size is not everything. You need to have a credible project. So we executed a high quality systematic exploration program, which ultimately led to the discovery of that project, which we're talking about and which actually underpins our value. In fact, in this company, we get 0 value for everything else. Everybody only looks at our Twin Hills project. And so there's an opportunity potentially to consider a spin-out of these exploration assets, which we are contemplating possibly for next year. So that would be an easy way to generate 20-30% extra return for shareholders. But that's conceptual at this stage. So this is north central Namibia, and the Twin Hills project is at the bottom here, very close to the other gold mine, one of the other 2 gold mines in Namibia, which was owned by Anglo Gold, large South African gold mining group. Okay, and so I'm just zooming in successively. I'm getting into the project. So we are in this belt that I mentioned earlier. We consolidated a large-scale regional structure, or by structure, I mean it's a fault, it's a break. And these structures are the conduits for the mineralizing fluids that came into this area in the days of Gondwana land. When you had the plate tectonics moving apart, coming back together, you had these mineralizing fluids that came in, and they concentrated in specific areas where there was structural discontinuity, and those are gold deposits. So these 2 sentences I've just made is a very basic textbook description of these type of deposits. They occur in other parts of the world, in Canada and South America, but they have certain characteristics. One key characteristic is that they tend to get large, and another one is that they tend to be highly continuous. So that's important for you as an investor, because it means that the geological risk is reduced. You should not imagine this as it is in the comics or in the old Western books where you have little veins of gold. This is disseminated. So this is like a fog of gold spread through this rock mass. So that means when we ultimately get to mine this stuff, it certainly will be there. And that geological risk, I think I mentioned that in the beginning, is substantially reduced. So that's where we are. This mine over here is a world-class deposit. It has a historical resource of about 8 million ounces. It's the biggest gold mine in Southern Africa outside of South Africa. And we are about 20 kilometers away in the same belt. The other geological characteristic that I should mention is that these things tend to occur in clusters and not in isolation. I think the fact that we found this 20 or 30 years after the discovery of this one is testament to this. At the moment, we have 2 million ounces, so we're about a quarter of the size of this one. But I expect that our resources will grow substantially over the next few years. 2 million ounces, to put it in context for maybe a non-mining audience, 2 million ounces is typically the starting position. That's the sort of minimum that you need in order to be able to develop a credible tier 2 operation. This is not tier 1, tier 1 meaning world-class, but I'm quite happy with tier 2. This is the type of operation that your classic international gold mining group, let's say the second tier of gold mining groups, would be interested in acquiring. And remember, that's ultimately our aim. Our aim is to deliver a project that has the size and the attributes to be acquired by a group such as that. So that's why we have to deliver quality work and so forth, as we are doing. All right. So we've made 2 discoveries so far. Twin Hills is the one, Clouds is the second one. And I think there will be additional discoveries that will deliver that growth. We were heavily focused on exploration. Now that we've found this deposit and we've delineated, the focus is on actually developing this project to the construction and production stage. So the PEA, that stands for Preliminary Economic Assessment, it's a Canadian term for pre-feasibility study, that was announced, and it outlines the size of the project. It's got 10 to 15 years life of mine. It's got, it produces about 100,000 ounces a year. So you can call it sort of a $50 million cash flow, free cash flow per year. And if you discount that back, you get to an NPV of about $400 million. That's our market cap at the moment is less than $100 million. So that puts that in context. So we're currently trading at about a quarter of the inherent value of this project. And I would say that our peer group, other companies or developers, trade probably at about half, and that indicates the sort of valuation. It shows you how undervalued we really are, and it's obviously a key part of our opportunity. The project is relatively, well, it's easy to develop. It's technically simple, geologically consistent, with manageable capital, about $200 million of capital. And, you know, the operating costs and all the numbers really stack up. It does have very significant upside potential still, which we are currently engaged in delivering. So our plan at the moment is to come out with a second study around Q1 next year, which should deliver more or less a 50% improvement in value. And it should also deliver a higher production rate, around about 150,000 ounces a year, which is important for potential acquirers. Sorry, I realize I'm bombarding a lot of the non-mining audience here with a lot of numbers, but these numbers are key to put the project in context in the global scheme. So it's a very real project. It definitely will be a gold mine. It definitely will be developed. It's just a question, will it be us? Or will it be us with somebody else, or will it be somebody else? It certainly is going to be one of those options. So just to give you some assurance, of course, I'm not the only guy doing all of this. Yes, I'm a mining guy. I've built gold mines before. I've operated gold mines before. I've been around the block. But we work with top-class specialists who help us, the best in class. Lycopodium is one of the most well-known African mine builders. It's an Australian company. They list it. They are our study manager and coordinating consultant. And we work with a range of other specialists for all of the sub-disciplines that a typical mining project has. Of course, everything starts with geology and the resource. Thereafter, mine planning. There's a big environmental angle to it. You can imagine digging a big hole and creating waste dumps, etc., requires tight environmental and social impact assessments, and we're doing that to IFC and literally to world-class standards. And yeah, so all of these specialists are delivering work to the same standard as a major mining company would deliver it. That's important, not just because we believe in quality. You know, being of German descent, you can imagine I'm, you know, quite quality focused, delivery focused, and so forth. But also it's very important because ultimately we want to be acquired, and that will only happen if we've delivered quality work to the same standard. And for you as an investor, it should give you some assurance that if you invest in this company, you can be sure that the engine room is well oiled and in good shape. So yeah, this is a plan view of our project. It's more geared towards a geological audience. It shows you the detailed drilling. Again, I'll try to put it in context. So we've done about 100,000 meters of drilling this year. And so those are all the dots that you see on this map. The more drilling you do and the denser you drill, the more geological confidence you have. That's important for financiers, important for investors. Typically projects get built, projects like these get built with probably another 50% more drilling. And we're going to do that in the next 6 months. So this project already, in terms of the density of drilling, is at the bankable feasibility stage. So it's at the pre-construction stage. And I highlight this so much because, you know, a lot of investors, I said earlier, see us as an exploration company. We're actually not an exploration company. The level of work and the detail of work that's been done here is already at a stage where the project is about to be put into production. So, and the results are very good. The gold mineralization is very continuous, very disseminated, and has a lot of upside. It's generally an unusually thick package. In fact, I'll go to the next slide. Here you can see this is what the, so this slide is the geological resource that it comes from all the drill holes, purple and red being the best, and green, yellow, blue going down in value. And then the mine planning engineers create the pit. So this is the open pit. This is about 10 years of, it's actually more, this is about 15 years of production. If you look at it in its section, i.e. if you cut it through, I've got 3 sections here. You can see a thick package going down, an open pit like that mines it out, and very continuous along strike. So it's straightforward. It's really bread and butter type of stuff. In terms of metallurgy, so that's a key question that people ask is, can you extract this stuff from the rock? And there we've done a huge amount of work. We've done 4 rounds of metallurgical test work. The simple answer is yes, it's easily extractable from the rock using a straightforward off-the-shelf vanilla process that's been used many times before. So that work's all been done. That's another major de-risking step ticked. And it's a stock standard processing layout as many mines in South Africa and the rest of Africa have been built. This is the site layout. So that's a picture over there. That's what it looks like currently. This is what it will look like in future. We are very close to an excellent Namibian infrastructure network. So tarred roads, power lines, water, everything's there. And that's one of the reasons the capital cost is so low. And it's also obviously a major reason why this project will be relatively easy to build. It's not in a jungle. It doesn't require relocation of artisanal miners. It doesn't require building of camps or anything like that. It really is a straightforward project. And it is in an excellent location. I mean, most of the mining, I mean, not location, jurisdiction being Namibia. As you know, a lot of mines these days are located in Russia or in the Stans or in difficult places, and whereas this one is not, which should justify a premium on the valuation, and it certainly is causing a lot of interest from corporates who are already talking to us. There's a lot of exploration upside still. This is a geophysical image. It's geophysics. We use geophysics as a pathfinder. We think we've made another discovery over on the west here. It hasn't been announced yet. We're waiting for some more drill results, but that could be the next step up in terms of ounces. So lots of upside still to make this project bigger and better. Yeah, that's exploration upside. On the technical upside, sorry, let me say that. So exploration upside is obviously, as Donald Rumsfeld says, they're the known unknowns and the unknown unknowns. So I would call exploration upside is kind of the unknown unknown. You have to drill to find, and until you've drilled, you don't know whether you have it. But the known unknowns is the stuff that's under our control. That is to improve the project through clever engineering, optimization, and enhancements. And that is what we currently engage with that will result in that 50% improvement. Everything that we do with exploration that we gain is a cherry on top of that. So all of this growth that I'm talking about, I consider that in the bag, and we will deliver that in about 6 months' time by around Q1 next year. And that is extra ounces, an optimized mine plan, enhanced metallurgical process, which together will result in about a 50% project scope improvement. So the Canadians always want to know, what are the catalysts? Being a public company, we have to put out news. People ask, what are the catalysts going forward? So the green ones there are ongoing or have been completed, and then the 3 red ones are the substantial ones coming up. More or less the development timeline from here is we've done a pre-feasibility study now. We will do another one around Q1 next year that will re-benchmark the project. And we will then very soon thereafter, probably about 3 months thereafter, come out with a bankable or a definitive feasibility study. For those of you who don't know that term, that's a study to the highest level of detail that a bank will accept for debt financing. Remember, we have no income, so therefore we're reliant on equity financing. But to build a project like this, our market cap is 100. The project will require 200, 250. So we are going to have to find project finance. And for that, we need that bankable feasibility study. That's key. Yeah, so we've delivered the first resource. We've delivered the initial study. We submitted our mining license application already. De-risking is key. For us, de-risking means exploration and metallurgy we spoke about, but also permitting. When can we get a mining license? I mean, for the German audience, you'll be acutely aware how difficult it is in Germany to go through these, what they call Genehmigungsverfahren, German word for approval processes, which in Namibia are easier to do, but they still take time. They take about a year in this case, and we are deeply into that. So that should be delivered around about middle of next year. And that is, of course, the key approval, the mining license that we need in order to actually start mining, either us or the next owner of this company. Ongoing exploration, that's drill rigs, drill. That's what we're busy with. We've got 10 rigs on the ground. We're very, very active. And then there are other de-risking steps, like, for example, acquiring the surface rights, the farms. In Namibia, we've got a system of freehold. We're actually dealing with a German, one of my Namibian German compatriots, who's the farm owner. We're dealing with him. We're very interested in acquiring his farm. We're in deep discussions. And yeah, I think in the next 6 months, we will conclude that. So that's very important for us. We want to own the land that we operate on. And there are a couple of other steps, like, for example, power line connection, water connection. All of these things are critical in order to show that this project will be mined, or in order to start mining at this project. And we are all deep into these processes. Then the red ones this is the growth that I spoke about. So deliver a substantial improvement in NPV, net present value, and gold production. That's in the bag. That will come out through the next study, Q1, and then the definitive, I mentioned it earlier. So at that point, it's going to get interesting, because then the big question is, do we mine this mine? Do we build this mine, or does somebody else? Of course, I cannot force M&A, a merger or a takeover offer. We do have a bunch of international mining companies that are actively looking at us. And I do think that given the right share price, that M&A will happen. And therefore, I do think that somebody else will end up building this project. It could happen soon, could happen later. I think the biggest impediment to this happening at the moment is the share price, because our share price is far too low. We would not do a deal at anywhere near these levels. So we would, we're looking for a substantial improvement in share price. And that will come through delivery over the next 12 months. And that's why I think from about the middle of next year, M&A is a real possibility. And I think that's a key aspect of our investment proposition, and that's why I'm happy to talk about it so openly. I don't think selling the company is a dirty word. In fact, it's good for shareholders because it de-risks the project. But if we have to, we will build it ourselves and generate value that way. So therefore, middle of next year, thereafter, it will be front-end engineering and design that's converting a feasibility study into an actual plans that engineers can build, and the commencement of early works, early earth moving probably towards the end of next year. So in comparing us to the rest of the mining world, we are extremely fast. We've gone from discovery to, we will go from discovery to initial production in less than 5 years. It's unheard of. There's maybe one other project that I know that did it so fast. Usually in mining, it takes 10 or 15 years. So I'm very proud of this fact. And the reason we have been able to move so fast is because we driven, management is incentivized. We've got a big share in the company. We want to move this forward. We've got top shareholders that support us. So we've got the money to do what we need to do, and we know what we need to do. Being a mining engineer, having done this a couple of times before, we know what this is all about. Okay, so then I see I've got about 10 minutes. I'll focus on valuation and why I think this is such a good investment opportunity. So bear with me. I'm going to preach a little bit here because some of you may not be familiar with this. In Canada, there's this concept called the Lassonde curve. It's a very often quoted and used concept, and it basically explains the life cycle of a junior exploration company. And effectively, it says that the first real lift in an exploration company typically happens on discovery, a lot of excitement, a lot of retail investors. Thereafter, often there's a period of stagnation, which we may have been in. And then just before construction, you have a major uplift again on share price. And it's actually amazing how often you see junior exploration companies going through exactly this life cycle. I guess it's a general venture capital life cycle, and a lot of other companies talking here today would have gone through something similar. I think we are at the trough here. We are on the cusp of a major re-rating, and I think that is the core reason why I think this Osino is such a great investment proposition. Putting it differently in terms of valuation, I want to give you a sense for valuation. So we are, as I said, transitioning from exploration to developing. There's a lot of execution, de-risking, and growth happening as we speak, which will result in a re-rate. That just happens. It always happens. And that re-rate, to go from left to right, if you look at producers, B2Gold, Endeavour, whoever they may be, Randgold, these companies, at the moment in a weak gold market, they trade at around 0.8 to 1 times their inherent NAV. If you go down the curve to the lesser known, like maybe the single asset producers or smaller companies, they trade about 0.7, 0.8. And the developers, good developers, near-term developers, trade at about 0.5. We're trading at 0.3. So just on our current project, you should expect a doubling in the share price. And that doesn't take into account the 50% improvement or more that we will deliver through project scope. So there's substantial juice left in the story. And at the same time, the valuation is lower, and that's why I think the downside is protected. Briefly, so we do believe in social license to operate. We've got a very active sustainability program. We really want to do the right thing. Being a Namibian citizen, we've got to make sure that this project benefits all, and we're making a big effort to achieve that. And then my last slide, see I've got a bit of time here, is just to summarize to you guys what Osino is all about and why us. So we're led by a proven team. We've done this before. We've built companies, we've advanced companies, we've sold companies, we've even built gold mines, or I have built gold mines, one, or was involved in building one. So you've got a credible team with a track record of delivering value that's founding shareholders and in charge of this company. We are not just a dream. We've got a real project, the Twin Hills project. It's got high value. It's undervalued at the moment. It's being fast-tracked. The engine room is simple, so no fatal flaws, no issues, manageable costs, and most importantly, I think you've got reliable and trustworthy management, and we do what we promised. So I think that's the essence of Osino, and I'll end there. Thank you very much for listening and for your attention.
Excellent presentation. Thank you very much. to the audience, you can always ask questions via the chat or the Q&A function. Currently, we already have 2 questions in the Q&A. So the first one is, how much of the company do you own, Mr. Dawn?
Yes, sure. So, sorry, I've just got to add it up. I own it in different accounts. So altogether, around about 8%. That's me. Then my father, my brother, my sister, my friends, so close associates own another around about 4 or 5%. My partner, Alan Friedman in Canada, owns about 4%. So altogether, our tight group owns about 15%. Then there's Ross Beatty, he owns about 14%. And then there's Resource Capital Funds. I didn't mention them. They're Denver-based private equity fund that have been there from the beginning. They own just under 10%. So that's about 30–40% of the company.
Okay. The next question is, at what price was used at the economic analysis that you did?
So we used a gold price of $1,700. Of course, it's always a contentious thing. Is that too high or is that too low? And that gave us very good returns. In the document, you can find it on the website and elsewhere, and I can quote it now. You will see that the project is not that sensitive to gold price. So it is quite profitable, even at lower gold prices. The reason we used a slightly elevated gold price is because these studies are generally geared towards the equity markets, and those guys want to see what the true upside of a project is. If we were a mining company actually building this project, like when we do our feasibility study, which we will show to the banks next year, we will likely use a lower gold price. So probably $1,300, $1,400, maybe $1,400. Most of the big mining companies for capital budgeting purposes use $1,300, $1,400. But that's the wrong way to look at it if you want to look at it as what's the upside of the project. So anyway, I hope that's a good answer. But you can, if you have a different view on the gold price, there's a sensitivity table in the document, and you can just look at the results at different gold prices.
Perfect. The next one is regarding the private placement of 5.5 million Canadian. What's the goal of the private placements, and when will be the shares delivered?
Okay, yeah, thanks. I didn't speak about that. We announced it last night. The simple answer is the private placement like that is there to make us look strong. Because for those of you who are active in the Canadian markets, you know, when a company when the cash reserves dwindle, the vultures start circling, and they sell you down because they expect an imminent financing. So you always have to do a financing when people expect it the least. This financing I'm very proud of, because we did it at a minimal discount to the market in a very weak gold market. At the moment, the financing window in the gold space is closed, or is not good. Not a lot of financings happen. So it was a preemptive financing. We don't really need the money right now, but it makes us look strong into next year. And it also brings a key shareholder, that guy, Pat DeCarper, he's mentioned in that press release, his firm Power One Capital Markets. He's a big mover and shaker in Toronto, and he's a very important player, and he's very supportive. He gets active in the market, he buys in the aftermarket, etc. So the purpose really was to make us look strong and to position him. He was a shareholder already, but now he will go up to around about 8%. So it's great to have these kind of guys on the share register, and I think that sets us apart. Actually, let me just delve on that. If you compare us to many other early stage exploration companies in Canada, our share register is really Mercedes-Benz. It's enviable. We've got the who's who there. We've got 3 billionaires. We've got institutions. We've got an amazing range. We've got a great bunch of excellent German shareholders. I should not forget to add, and that makes us special. And this is just strengthens that further. Sorry, a long answer to a short question.
That's great. Then there's another question, that the person heard that you can only buy the resources in the first 10 to 30 centimeter under Namibian land. Is that true?
No, well, I don't fully understand the question. I'll try to respond to it anyway. The way it works, and in fact, I think in Germany it's the same. You've got surface rights and mineral rights. Surface rights like under the days of the Kaiser years ago, they were the same. If you owned the land, you owned everything that's underneath. Nowhere, in very few places in the world, only in Texas, it's still like that. But in the rest of the world, you own, like I'm a farmer, my family are farmers, we own the farm. But anything below the ground is owned by the state. And the state hands out a license to anyone wishing to apply for one. If you want to apply for one, you can apply for one. But you have to put up a work program, financial capability, and technical or financial capacity and technical capability. And with that, you win licenses. That's a standard system worldwide. And under that system, we own these licenses. Now, initially you do exploration. So you've got exploration licenses. Once you found something, you then apply for a mining license, which gives you a 20-year window. And that's what we did in August. So we expect in the next year to have that mining license granted, which will give us 20 years to extract those resources. So I hope that makes it clear. But a farmer, I should say, a farmer, of course, by virtue of controlling access, can, of course, make your life very difficult. And that's why it's very important to actually own the surface rights and the mineral rights. And that we will do.
I think that answers the question. Thank you. So far, just another question just popped up. When will the shares of the private placement be delivered? Well, that's, I think did you already answer that?
No, I don't know exactly. It's going to be in the next week or two, but usually on a private placement, there's a 4-month hold. It's a Canadian statutory thing. So there will be no selling from these shares for at least 4 months. Which, by the way, takes us beyond Christmas and tax loss selling, which is often an issue in Canada. So from a timing perspective, it's actually perfect. So I don't expect a big sell down in the market as a result of this financing.
All right. So currently there are no further questions. Maybe we just give it another minute. Maybe someone else thinks of one. You mentioned that you wouldn't do the financing at the current share price. Can you tell us maybe a share price that would make sense for you to do the whole financing via equity?
No, let me explain. Our current share price is, I don't know where we closed yesterday at $1.15. But a financing is typically done at a discount, an equity financing, slight discount. So in the current market, we would have had to do it ordinarily at a significant discount, probably $1 or 90 cents or so. That's the reality. If nobody's offering you money, your price needs to go down. And that we would not have done because it would have been weak and bad for shareholders. And that's why we are so pleased with this financing, because it's being done at $1.10, which is just very marginally below the market, very, very small discount, which I think is testament to the strength of our shareholders and to our reputation, because people know us and know that we will deliver. So that's really what I was saying, is that we're happy that we were able to do this more or less at the current share price. I think it's quite unusual in a weak market.
Perfect.